Morning Intel, April 4th, 2026. The gap still holds. Markets look strong this morning. Jobs came in hot, plus 178K added. Unemployment ticking down to 4.3%. Yields creeping higher. On the surface, that reads like strength. But take a second look. It's not that simple. Participation dropped hard. Fewer people actually in the workforce. So what you're really seeing isn't clean growth. It's optical strength covering structural fatigue. And when that happens, the system usually finds another way to fund itself. Backhand index pointing right translation. More pressure moving into private credit and off-balance sheet channels. Then you zoom out. Globe showing Europe-Africa energy plus geopolitics. Iran just down to U.S. aircraft. That's not noise, that's escalation. And layered underneath that, we already know there's a fully built financial system supporting it. $9B in shadow banking activity. UAE, Hong Kong, Singapore corridors. Oil plus shipping plus shell companies all tied together. This isn't opportunistic behavior anymore. It's infrastructure. Now the key shift. Backhand index pointing right conflict plus financial networks are moving together. Which means oil flows get manipulated. Trade routes get adjusted. Money moves through harder-to-track channels. Money with wings, shadow finance. Here's the part most people miss. Pressure doesn't shut these systems down. It makes them smarter. More layers. More intermediaries. More fragmentation. Exactly what FATF flags around. Alternative remittance. Wire opacity. Shell ownership structures. And per unaudited logic. Information evaluated becomes intelligence. Right now we're past signals. We're seeing pattern convergence. Chart decreasing credit plus valuation. This one's quieter, but important. Private market valuations are starting to get questioned. Audit quality under the spotlight. That's early stage risk, not default risk yet. Measurement risk. And when you can't measure risk properly, you don't eliminate it, you just delay it. Canada real economy. Canada plus spillover. This is where it starts to show up. SMEs under pressure. Payment delays building. Workforce adjustments beginning. From a black economy lens. Stress. More cash usage. More informal labor. More reporting gaps. Nothing dramatic yet. But the direction is clear. Brain, so what's actually going on? Two systems still telling different stories. Markets. Pricing resolution. Pricing optimism. Everything underneath. Flows, behavior, infrastructure. Still processing stress. And that gap? It hasn't closed. Direct hit what to watch next. If this stress is real, you'll start seeing shipping anomalies, tanker tracking gaps, insurance costs creeping up, messy trade documentation, private credit redemption pressure, SME strain headlines, especially in Canada. Receipt bottom line. Markets are moving ahead of reality, but the system underneath is still adjusting. And like we've been tracking, pressure doesn't disappear. It just moves.